Good morning to all traders and welcome to today's market insights video provided to you by Orbex. It's Tuesday, the 14th of April today. And I want to talk about the US index as well as the S&P. Well, we've seen the latest data from China, export pretty much, just signaling a potential rebound. That's why we are actually seeing the equities index is moving a little bit higher on the day. Now, the thing is that China did record trade surplus after the coronavirus lifts, of course. At the same time, in Europe, we've seen an agreement between the countries to support governments through the European Stability Mechanism. Now, that seems, of course, to be a bad case for Italy, because Italy is the one who undoubtedly has to borrow most, so it means that in return they will have to pay the most. Despite that, because of the agreement itself, I mean, we are seeing the euro moving higher now. The UK situation remains the same. We all know that Boris is not in the intensive care any longer, so pound is supported as well. Now, the strength of pound and euro are actually pushing the dollar index down. Now, at the same time, the S&P goes up. So without further ado, we don't have really a big calendar for the day. We have the G7 teleconference meeting, of course, is going to be important for global economies. And other than that, we have the API report that could offer some, I wouldn't say relief to be honest, but more downside for the oil market. As we've seen, the 10 million barrels production cut was not enough. Now, starting with the dollar index, I want to start a little bit like a long term today, because I want to show you how I'm looking at this now, because I went the other day for our quarterly outlook. I went out and looked at the weekly charts, and I realized that this is a very nice ending triangle pattern indeed, right? So we've got 1, 2, 3, 4, and we're expecting wave 5. And this is, of course, you know, in the cycle degree, wave C, because we have an A, B, and a C correction over here, right? Now, this ABC correction is made of a wave A and a B over here, and then C wave looks like an ending triangle. Now, with waves 1, 2, 3, and 4 done, and we are actually done also half of wave 5 over here, right? With a W wave, because we are in an ABC correction, I'm expecting to see prices moving down with an ABC pattern, right? Once we take out wave C, which is also wave X, then most likely going to see another ABC correction to take out wave Y, that would be 5C, as well as wave B in the intermediate degree, in the super cycle degree, and then from there we're going to head lower. But obviously we're on the weekly chart, so you can of course understand that we're talking quite long term here. If we go a little bit down on the daily, right, what we're seeing here is 1, 2, 3, 4, and most likely going to see another move down to take out wave A. Once we see A, we're gonna push higher for B, and then we're gonna get another wave C. Now, the structure we currently see on going towards in wave A, it looks impulsive, okay? Because we fell down here, we don't have penetration over there, right? We're still moving 1, 2, that is 3, 4, and heading down for lower, for below 82.25, right? To create, of course, wave 5. Now, where wave A ends, it really depends on the extension of wave 5, because wave 5 can really be anywhere below wave 3, so anywhere below 98.25, right? Now, since we're on the daily, let's jump on the S&P quickly as well. We talked about the S&P, we were expecting the prices to move higher, right? We talked about that last week. So we are, I mean, I see this as an ABC, and then I see this again as an AB and a C, right? And if we, in fact, go a little bit closer here as well, I want to go actually down to, let's go down to the 8 hours. We can clearly see this structure, okay? We've had the ABC done, and we are heading, in my opinion, higher now to take out wave C in the primary degree on the upside. That will be the correction wave, right? which is also going to be wave X, because I see this as a W, X, and Y correction that is probably going to go down to the 1700s. Before that, however, I think that we still have a bit more space to move to the upside. We have 1, 2, 3, 4, and this looks like it could be an ending triangle to me. Okay, so in my opinion, we're moving. We've had 1, 2, 3, 4, and 5 down over here for A, correction for B, and C. We are in the fifth wave, which is likely to be an ending triangle. So that being said, we've got ABC, 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 and most likely to go up to the 2893, which is also the 100 Fibonacci extension of waves A and B. Now, at the same time, the same level, if we take the retracement from the high to the low that we've recorded recently, the 61.8 Fibonacci retracement is also around the 2933. So I believe, because we also are trading near the previous low over here, we are likely to get some test here, okay, and potentially start moving to the downside. Now, since this is corrective, the penetration over here won't really mean anything, and we would be very easily to move even higher than that, right? So I wouldn't be surprised if we see prices going to the 3130, which is a very good level, respected actually usually when we have complex patterns as a W, X, and Y, for example. The 78.6 is a good level to look for sales as well. Now, the other scenario would be that we ended this move to the downside, since this move to the upside is looking impulsive indeed, and we are 1, 2, 3, 4, and 5, so we're gonna go for a new high.